Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now this is the last and final video on problems on ratio analysis. So last three problems I'm going to explain you in this video. That marks the end. I have covered up every type of problems of ratio analysis. So last so many videos I've uploaded on all the problems of ratio analysis. If you want the complete command on this topic of ratio analysis, watch from beginning. Don't join in between and don't skip in between. If you want the complete knowledge of this important topic of ratio analysis, which is an important technique of of financial statement analysis. Many techniques are there for analyzing the financial statements, but the most widely used, most commonly asked in examination is ratio analysis. And it requires more effort in remembering the formulae. All the problems are based on the formulae only. So right now we are doing the problems on reverse back method, where ratios are given. From the ratios we have to prepare a balance sheet. These are called reverse back problems. Now I'm going to start the next problem number 13. See, if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many subjects, videos like financial accounting, cost accounting, corporate accounting, advanced corporate accounting, managerial accounting, income tax, business statistics, financial management, investment management. So many videos I've uploaded in the playlist. So go to the playlist, select your subject, select the topic, watch the video. Definitely you will gain a lot of knowledge from these videos. So now I'm going to start the next problem, that is problem number 30. Before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching this video. Now 30th problem. The following data relate to Star Limited for the year 2014. Using data, fill up the blank balance sheet. So first time balance sheet are also given in the problem. In the balance sheet, all the values are not given. Few values are given and few values are missing. And you have to fill up the missing balance sheet. So what is the balance sheet? Liability side, bills payable, no amount is given. Long-term debt, you can see the board here. This is the blank balance sheet given in the problem. I have copied down the balance sheet. So bills payable, amount is not given. Long-term debt, amount is not given. Share capital 1 lakh, general reserve 1 lakh. These two amounts are given. And total of the balance sheet is 14 lakh. Now asset side, cash amount is not given. Bills receivable not given. Inventories are given 1 lakh. And plant and machinery not given. So whatever amounts are not given, we have to ascertain by using the ratios given in the problem. So I'm reading out what are the ratios given. Long-term debt to net worth 1:2. Total assets turnover 2.5. Average collection period 18 days. Inventory turnover 9. Gross profit margin 10%. Acid test ratio 1. That's it. These are the ratios given. One by one ratio we use and find out the missing values in the balance sheet. First ratio given, long-term debt to net worth is 1:2. What do you mean by long-term debt to net worth? The formula is long-term debt divided by net worth is equal to 1:2, means 1/2. This is the meaning of this ratio, 1:2. That's all. Now in this long-term debt by net worth is equal to 1/2. What do you mean by net worth here? Net worth means share capital plus reserves. Already in so many problems, earlier problems, we have discussed this point. It is called net worth, it is called shareholders fund, it is called proprietors fund. All means same. Share capital and reserves and surplus is called net worth. How much share capital given in the problem? 1 lakh. And reserves, general reserve 1 lakh. So 1 lakh plus 1 lakh, 2 lakh rupees is the net worth. So in this formula, net worth we have 2 lakh. Long-term debt we have to find out is equal to 1/2. If I make a cross multiplication, 2 into long-term debt, 2 long-term debt is equal to 1 into 2 lakh, 2 lakh. So 2 long-term debt is equal to 2 lakh, long-term debt is equal to 2 lakh by 2, 1 lakh. One item we got it. Which is the item we got? long-term debt is 1 lakh. This is the long-term debt. This is the 1 lakh rupees. I got it. The one missing figure I have ascertained. That is long-term debt. Now easily we can find out bills payable because the total of the liability side is 4 lakh. Out of 4 lakh, 1 lakh rupees general reserve, 1 lakh rupees equity capital, 1 lakh rupee long-term debt. The balancing figure bills payable is 1 lakh. Automatically we can take here. No need to make the calculations. We can take balancing figure 1 lakh over liability side completed. Now we'll come to asset side. Next ratio I am making use. That is total assets turnover ratio. Total assets turnover ratio is given in the problem 2.5. What is the formula for total assets turnover ratio? Sales by total assets. This is old ratio, already in previous problems we have applied. So sales by total assets. Sales we don't have, but total assets we have. How much is the total of assets? 4 lakh. So sales by 4 lakh is equal to 2.5. If I make a cross multiplication, sales is equal to 4 lakh into 2.5, 10 lakh rupees. We got sales 10 lakh rupees. Next, average collection period is 18 days. Average collection period 18 days given in the problem. So what is the formula for average collection period? You have the list of the formulas which I have given in the first starting videos. I have explained you all the formulas of different ratios. The average collection period, the formula is number of days in a year divided by debtors turnover ratio. Number of days in a year divided by debtors turnover ratio. This is the formula for average collection period. And average collection period is given 18, right? So number of days in a year are 360. We assume. See here. Actually number of days in a year are 365. Non-leap year. Leap year will have 366 days. The non-leap year 365 days. But for making our calculation easier, I take a round figure of 360 days. For making easier calculations, simple calculations, I'll make 360 days in a year. Assumed. It is assumed 360 days in a year divided by debtors turnover ratio is equal to 18. Now if I make a cross multiplication here, what will happen? 18 into DTR is equal to 360. So DTR is equal to 360 by 18, debtors turnover ratio 20. So by using this average collection period, I got debtors turnover ratio 20. And what is the formula for debtors turnover ratio? Net credit sales divided by average debtors. Net credit sales divided by average debtors. But due to lack of information, we can use the alternative formula. The alternative formula is sales divided by closing debtors. Sales divided by closing debtors. And debtors include bills receivable. In this formula, the closing debtors includes bills receivable, right? So sales are how much? Just now we have calculated 10 lakh. So 10 lakh divided by bills receivable is equal to 20, right? So if I make a cross multiplication here, it will become 20 into bills receivable is equal to 10 lakh. Bills receivable 10 lakh by 20, 50,000. Come on. One more unknown variable we got it. We calculated. Bills receivable are 50,000. Here I am taking bills receivable 50,000. Now, next ratio is acid test ratio. That is also given in the problem. So, acid test ratio is the quick ratio. That is given as 1. So, quick ratio. What is the formula for quick ratio? Quick asset by current liability. QA by CL is equal to 1. Right? QA divided by CL. CL stands for current liability. So on the liability side, you can see which are the current liability. Only one current liability is there, that is bills payable. Bills payable is the only current liability. How much is the current liability here? 1 lakh. So in place of CL, I am taking 1 lakh. Now cross multiply, quick asset is equal to 1 lakh. By making cross multiplication, quick asset 1 lakh. Now what do you mean by quick asset? All current asset excluding inventory. All current assets excluding inventory. So here you can see cash, bills receivable, inventory. These three are the current assets. These three are the current assets. Out of these current assets, leave the inventory. Don't include the inventory, you will get quick assets. So which are the quick assets? Cash and bills receivable are the quick assets. The quick assets are cash and bills receivable. In this, quick assets are 1 lakh, we got it right now, and bills receivable just now we have calculated 50,000. Bills receivable are 50,000. So bring this 50,000 to LHS minus 50,000. So cash is equal to 50,000. We got cash also 50,000. That's all. Now we don't require any other ratio which is given in the problem. Some more ratios are given, but we don't need it. Our balance sheet is filled because the total is 4 lakh. Out of total, 50,000 is the cash, 50,000 bills receivable, 1 lakh inventory. Only one item is remaining. That item is plant and machinery. This plant and machinery, I will take it as the balancing figure. Balancing figure. So 1 lakh, 2 lakh, 4 lakh minus 2 lakh. 2 lakh rupees are the plant and machinery. That's all. Problem completed. All the missing item of the balance sheet I have ascertained by using these ratios. That's only knowledge you must have regarding this ratio analysis. I have explained each and every point just to take the interest, have an urge to get the knowledge, to get the command. Don't keep a simple, narrow, objective mission of passing the examination. Forget about examination. I'm learning to get the knowledge. I want the power. That's the intention you must have as a student. Then only you will have the power. Otherwise, if you keep a narrow objective just to pass the examination, you can pass, no doubt about it. By applying simple 1 or 2 days preparation, you can pass the examination. But what you will do with the degree? Nothing. So take interest in learning, watch with some patience. Then definitely you can get a lot of knowledge. So we have completed 30th problem. Problem number 30 completed. Come on, now we'll start the next problem. That is problem number 31. Assume that a firm has owner's equity of rupees 1 lakh. The ratios for the firm are, the one item is given, base is given, that is owner's equity 1 lakh. Current debt to total debt 0.40, total debt to owner's equity 0.6, fixed assets to owner's equity 0.60, and total assets turnover 2 times, and inventory turnover times 8. Actually in the paper, in the question paper, 8 is not printed. So I am telling you, so write down there 8. 8 times is the inventory turnover ratio. Next page, complete the following balance sheet given the information above. So again, a blank balance sheet is given. So you have to find out the values of the variables which are given in the balance sheet. So blank balance sheet is given, this one. This one is the blank balance sheet given in the problem. Equities, current debt, long-term debt, the total debt, then owner's equity, total equity. Asset side, cash and inventory, total current assets, fixed assets, total. This is the complete blank balance sheet given in the problem. You have to find out all the values from the given ratios. So one by one we will take the ratio and ascertain. The first ratio I am going to use is owner's equity is given 1 lakh rupees. That is the clue given. Now first, total debt to owner's equity is equal to 0.6. That's the ratio given in the problem. So what is the formula for total debt to owner's equity? Total debt divided by owner's equity. Total debt to owner's equity. So total debt by owner's equity is equal to 0.6. Total debt we don't know, but owner's equity is given in the problem 1 lakh. So in place of owner's equity, I am writing 1 lakh. Now I am making a cross multiplication. Here I am making a cross multiplication like this. So what it will become? Total debt is equal to 1 lakh into 0.6 is 60,000. So one item we got total debt 60,000. One item we got total debt 60,000. So here total debt is there. I am taking down here 60,000. One item we got it. Next, current debt to total debt is 0.4. Current debt to total debt 0.4. The formula is current debt divided by total debt is equal to 0.4. In this total debt already we have calculated 60,000. So in place of total debt I am writing 60,000. So current debt divided by 60,000 is equal to 0.4. Again I am making a cross multiplication. So what it will become? current debt into 1 is current debt, 60,000 into 0.4 is 24,000. So I got the second variable, current debt 24,000. This is the current debt 24,000. Out of the total debt of 60,000, 24,000 are the current debt. So how much is the remaining long-term debt? 60,000 minus 24,000, 36,000. 60,000 total debt we have calculated. Current debt we got 24,000. So total debt consists of current debt plus long-term debt. Total debt consists of current debt plus long-term debt. We have the total debt, we have the current debt. So 60,000 minus 24,000, you will get 36,000 as long-term debt. That's all. Now owner's equity is given in the problem. How much is the owner's equity? 1 lakh rupees. So I am taking owner's equity 1 lakh. So what is the total equity? It will become 1,60,000. 1 lakh rupees is the owner's equity and 60,000 is the debt equity. So total equity will become 1,60,000. So in balance sheet, total of liabilities and total of assets will be equal. So total assets also 1,60,000. Now I am using another ratio. Total debts turnover ratio. Total debts turnover ratio. The formula is sales divided by total assets is equal to 2. Total assets, just now we have calculated 1,60,000. So in place of total assets, I am writing 1,60,000. Sales by 1,60,000 is equal to 2. Now I am making a cross multiplication. So sales is equal to 1,60,000 into 2, 3,20,000. We got sales. One more ratio I am making use, inventory turnover ratio. The original formula, inventory turnover ratio is 8 times. Actually, there is a misprint in the question paper. In the problem set, that 8 is not written. So now you write down 8. So COGS by average inventory. That is the original formula for inventory turnover ratio. But due to lack of information, we can substitute sales in place of COGS. Because there is no information to calculate the COGS. So in place of COGS, I am taking sales. Average inventory we can calculate only when opening inventory, closing inventory both are given. But opening inventory is not given. So we can substitute closing inventory, only inventory. So sales by inventory is equal to 8. Sales already we have calculated 3,20,000. 3,20,000 by inventory is equal to 8. Now I am making a cross multiplication. So 8 inventory is equal to 3,20,000. Inventory 3,20,000 by 8, 40,000. So I got inventory 40,000. Here you can see inventory 40,000. 40,000 is the inventory, right? Now the next thing is, the next item is total assets. Fixed assets already we have calculated. Yes. Fixed assets to owner's equity. One formula we have done. Fixed assets to owner's equity 0.6. So we got fixed assets 60,000. Already we got 60,000 fixed assets. So fixed assets are 60,000. Now you can see here total assets 1,60,000, in which 60,000 are the fixed assets. So remaining 1 lakh rupees are the current assets. So total current assets 1 lakh. The current assets consist of cash and inventory. Inventory is 40,000. Total current assets are 1 lakh. In this current assets, inventory is 40,000. So how much is the cash? 60,000. The balancing figure 60,000 is the cash. That's all. 60,000 cash, inventory 40,000, total 1 lakh current asset. Fixed asset 60,000, 1,60,000. That's all. This is the problem number 31. Now, the last and final problem, that is 32nd, problem number 32, I am going to read out. See carefully. From the following information, you are required to prepare a balance sheet. So again, we are given the ratios 1, 2, 3, 4 up to 10. 10 values are given, 10 ratios are given, and by using these ratios, we have to extract the values which are required in making the balance sheet. So first of all, you can see current ratio, liquid ratio, stock turnover ratio, gross profit ratio, debt collection period, reserves and surplus to capital, turnover to fixed assets, capital gearing ratio, fixed assets to net worth, and lastly sales for the year 12 lakh. By using this information, we have to extract all the values which are required in making the balance sheet. First of all, we'll begin with sales, because sales amount is given 12 lakh. Sales amount given 12 lakh, and gross profit ratio is also given 25%, GP ratio. Gross profit ratio 25%. So GP, gross profit, is 25% of sales. Sales we got 12 lakh given in the problem. So 25% of 12 lakh, 3 lakh rupees is the gross profit. We got the sales, we got the gross profit. Easily we can find out the cost of goods sold, COGS. The formula for COGS, sales minus gross profit, sales minus GP, 12 lakh minus 3 lakh, 9 lakh rupees is the COGS. The first two calculations, we got the GP, we got the sales, COGS. Now stock turnover ratio. Stock turnover ratio is given in the problem 9. The formula for stock turnover ratio, COGS by average stock. But we cannot, because in the problem itself the formula is given. Stock turnover ratio, in bracket the formula is given COGS by closing stock. So specifically in the problem itself it is asking, don't calculate average stock, take closing stock. So closing stock. So COGS 9 lakh rupees, closing stock. Cross multiplication. So 9 into closing stock is equal to 9 lakh. So closing stock 9 lakh by 9 is 1 lakh rupees closing stock. That's it. So this guy. Next, debt collection period is 1.5 months. The debt collection period is given in months. So we can convert it into debtors turnover ratio. Year consists of 12 months. So 12 divided by 1.5, you will get 8. So 8 times. Debtors turnover ratio is 8 times. This 8 times we got from debt collection period. So 12 divided by 1.5, 8 times. So what is the formula for debtors turnover ratio? Net credit sales divided by average debtors. So due to lack of information, we take only sales, and instead of average debtors, we can take debtors. Now sales are given in the problem 12 lakh. So in place of sales, 12 lakh divided by debtors is equal to 8. Now cross multiply. 8 debtors is equal to 12 lakh. Debtors is equal to 12 lakh by 8, 1 lakh 50,000. So we got the stock, we got the debtors. Next ratio will make use turnover to fixed assets, 1.2. Turnover to fixed assets. The formula is sales. Turnover means sales. Sales by fixed assets is equal to 1.2. Sales are given in the problem 12 lakh. 12 lakh by FA is equal to 1.2. Now cross multiplication, 1.2 into FA is equal to 12 lakh. FA is equal to 12 lakh by 1.2, 10 lakh rupees fixed asset. Got it. Next is fixed assets to net worth. Fixed assets to net worth. The formula will be fixed assets by net worth is equal to 1.25. Fixed assets already given in the, just now we have calculated. Fixed assets are 10 lakh. Net worth we have to find out is equal to 1.25 ratio given in the problem. Now cross multiply. Net worth 1.25 into net worth is equal to 10 lakh. So net worth is equal to 10 lakh by 1.25, 8 lakh rupees is the net worth. Next ratio I am making use, reserves and surplus to capital is equal to 0.2. So reserves and surplus by capital is equal to 0.2. Now I am writing by 1 because I don't have reserves and surplus, I don't have capital. Both we don't have. Both we don't have. So what do you mean by this? When capital is 1, reserves and surplus will be 0.2. That is the meaning of this ratio. Reserves and surplus by capital is equal to 0.2. It means that for every 1 rupee of capital, we have 0.2 of reserves and surplus. So capital 1 rupee, reserves and surplus 0.2. So add up 1 plus 0.2, 1.2. What is this 1.2? Net worth. Already so many problems we have seen. Net worth is equal to share capital plus reserves and surplus. Share capital plus reserves and surplus is net worth. So according to this ratio, if 1 rupee is the capital, 0.2 is the reserves. So add up 1.2 is the net worth. Now already net worth we got it now how much? 8 lakh. So in ratio form, net worth is 1.2. In amount form, the net worth is 8 lakh. So I am writing for 1.2 net worth amount is 8 lakh. For capital how much? For 0.2, reserve how much? This is ratio. 1.2 is the ratio. 1 is the ratio, 0.2 is the ratio. So for 1.2 it is 8 lakh. So 1 how much and 0.2 how much? So 1 divided by 1.2 into 8 lakh, you'll get 6,66,667. Similarly, 0.2 divided by 1.2 into 8 lakh, you'll get 1,33,333. So what is the 6,66,667 capital? The capital is 6,66,667. And how much are the reserves and surplus? 1,33,333. If you add up these two, you will get 8 lakh rupees. You will get 8 lakh rupees. Next is current ratio minus liquid ratio. Current ratio is given 1.75. Liquid ratio is given 1.25. So I am subtracting. So what is the formula for current ratio? CA by CL. What is the formula for liquid ratio? QA by CL is equal to 1.75 minus 1.25, 0.5. I'll take the LCM here. LCM is CL. Numerator CA minus QA by CL is equal to 0.5. CA minus QA is nothing but stock. Already we have discussed in the previous video also. Because QA is equal to CA minus stock. Quick asset is equal to current asset minus stock. If you take the stock to LHS, so stock is equal to CA minus QA. Stock is CA minus QA. So here CA minus QA I am writing stock by CL is equal to 0.5. Now stock already we have calculated. Stock already we have 1 lakh. So in place of stock 1 lakh divided by CL is equal to 0.5. Now cross multiply 0.5 into CL is equal to 1 lakh. CL is equal to 1 lakh divided by 0.5. You will get 2 lakh. So current liability we got 2 lakh. Now current ratio is 1.75. The formula for current ratio CA by CL 1.25. CA we don't have, but CL just now we have calculated 2 lakh. Now cross multiply CA is equal to 2 lakh into 1.75. 3,50,000 is the current asset. We got the current asset. Now I am making use current asset. The current asset consists of stock, debtors and cash. Here current asset we got 3,50,000. How much is the stock? Already we have calculated 1 lakh. How much are the debtors? 1,50,000. So stock is 1 lakh, debtors is 1,50,000 plus cash. We don't know how much is the cash. So now 3,50,000 minus 1 lakh minus 1,50,000 is equal to cash. Cash is 1 lakh. We got cash rupees 1 lakh. Now the current liability are assumed to consist of creditors, that is accounts payable. Only one item is the current liability. So we assume that current liability consists of only one item, that is creditors, that is accounts payable. That's all. Then capital gearing ratio, one last ratio is given, capital gearing ratio. Actually formula for capital gearing ratio, funds bearing fixed interest and fixed dividend divided by equity shareholders fund. Assuming there is no preference capital. Assuming there is no preference capital. So numerator long-term debt divided by shareholders fund, equity shareholders fund. Because we are assuming there are no preference capital, the long-term debt divided by shareholders fund. Shareholders fund means what? Net worth. Shareholders funds means net worth. 8 lakh rupees already we have calculated. So here long-term debt plus preferential capital divided by equity shareholders fund. This is the original formula. But we assume there is no preference capital. So long-term debt divided by net worth is equal to 0.6. So long-term debt divided by net worth 8 lakh rupees. Already we have calculated. So long-term debt divided by 8 lakh is equal to 0.6. Now cross multiply. Long-term debt is equal to 8 lakh into 0.6, 4,80,000. Over. We have calculated different values by using all the formulas which are given in the problem. Now we have to put these values in the balance sheet. So first we write the format of the balance sheet. Equity and liabilities, shareholders fund, share capital, reserves and surplus. Then non-current liability, long-term debt. Then current liability, trade payable. This is the total of liability side. Asset side, non-current assets, fixed assets. Non-current investments, current assets, inventories, receivable, cash and cash equivalent. Whatever information we got, we put it in the balance sheet and see whether it is tallying or not. If it is not tallying, then we have to make the assumption regarding the missing figure. Right? So first of all, liability side, share capital 6,66,667 we got it. Reserves and surplus 1,33,333, we got it. Then long-term debt, just now we have calculated 4,80,000. And trade payable is the creditor, current liability. Creditor, current liability is 2 lakh. Now if you add up all, you will get 14,80,000. The liability side 14,80,000. Now asset side, fixed assets. The fixed assets we have calculated 10 lakh. We got fixed assets. Then current assets. Current assets are inventories 1 lakh, receivables. Receivables means debtors. It is 1,50,000. Cash and cash equivalent 1 lakh. Now our balance sheet is not tallying. 1,30,000 rupees short we are getting on the asset side. The liability side we got 14,80,000, but asset side we are not getting 14,80,000. It is short by 1,30,000. Now we will make an assumption. What may be the missing figure here? We are having fixed assets and we are having current assets. So the missing figure may be non-current investment. So we'll make the assumption non-current investment balancing figure 1,30,000. Because 1,30,000 it is not tallying in spite of taking all the values from the ratios. So we make the assumption non-current investments balancing figure of 1,30,000. Now both the sides are equal, 14,80,000. That's it. So 32 problems I have solved on ratio analysis. So if you are genuinely watching all the videos, now you will be excited that you got the full command on the very important topic, ratio analysis. Ratio analysis. So from a theory point of view, first 3 parts are very important, and initial starting videos are very important regarding the problems. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, subscribe my channel if you have not yet subscribed. We'll start the next topic in this subject. The subject's financial statement analysis. One topic I have completed, ratio analysis. The next topic I'm planning to start is cash flow statement. Inshallah, in the next video, I'll start that one.